Hey there guys, my name is Andrew Taranta and I'm back with you on another Trxc video. This one is going to be in reference to the most recent development in the Trxc world, which is a 31.25 million registered direct offering of common stock. And I'm here today to give you a very brief overview as to exactly what that is and what that means for you. Before I get into that, though, I do want to go ahead and say thank you so much for the people who joined the Discord. And I'm hoping more people do join. I will put a link in the Discord and you can stop by and we can have conversations and whatnot in there. And in terms of all the new subscribers, I also want to thank, so I appreciate all of that. So with that being said, let me do what you guys came here for. Let me go ahead and kind of break this down. So, and what this means to essentially the company itself, which I think is really, really pivotal information. So going into the initial, institutional stock offering. So what exactly is an institutional stock offering? And what's the difference between an institutional stock offering and just a normal stock offering? Well, an institutional offering means that the private placement by the company to institutional investors. That's really what's important. And then they make this point I highlighted, which is the aggregate amount of at least $50 million of capital stock the company is then needed to kind of qualify for the institutional stock offering. Now, obviously, we know it's only 31 million, so is it an institutional stock offering? I mean, it's very difficult because essentially what the details are saying here is that, and I should have highlighted this as well, but it says, just to kind of read it over real fast, that a medical device company that's digitizing, said it a million times at this point, the interface between the surgeon and the patient to improve minimally invasive surgery, today announced that it has entered into securities purchase agreements with several institutional investors for the purchase and sale and a registered direct offering of 25 million shares of its common stock at a purchase price of 1.25 per share for gross proceeds of 31.25 million. Is it there? Is it at the point where the company is at the 50 million? No. But is it mainly just institutional investors? Yes. And who specifically? And by the way, it's expected to close on January 14th, 2021, which is very, very soon. So we're kind of getting to know this. It's an open shut deal. So it's getting done very quickly and should be done by the end of this week. And ultimately, what we want to know is, okay, so there's institutional investors. Who are they? Well, one of them is H.C. Wainwright. Okay? So H.C. Wainwright, all right, is a full-service investment bank dedicated to providing investment banking, equity research, sales and trading, as well as corporate access and yada, yada. Nothing too crazy. They ranked number one placement agent by the Informa Business Solutions. It's an investing firm, okay? We know what they do. So essentially what had happened in around September 15th, 2020, they participated in the 22nd annual investment conference, global investment conference, where H.C. Wainwright representative kind of sits down and listens to everything. And it's a very boring conference, but it's a very good conference if you're looking to make some money because there's tons of companies all giving presentations on why they should get an investment. So it's good because I think that to me is a reason why this is happening. I can see kind of like that line of events happening. So in around September, they had went to this conference and we didn't really hear anything after that. Honestly, we really didn't, other than we knew that the stock started growing towards like late October, early November. So, there was definitely a reason to kind of be interested at that point. But it didn't necessarily ring my bell like, oh, maybe it's the H.C. Wainwright investment or something. And now that I'm kind of looking at it, it does kind of make sense that this investment's happening. So I'm definitely not surprised by it. It's not like whoa, what the heck? So going forward, I kind of want to just go over a few pros and cons of what's happening here. So the pros being they're generating capital, and that's what happens when you do an offering. You generate wealth. That's money that is now part of your just balance sheet. And they sold it at 125, so it should go at least above 130, right? Should that not be our new floor, right? Have we not considered that the new floor? And improved balance sheet, which I just went over, and that they're institutional buyers who are looking for, a company that they're pretty sure is going to make them money because they have people who invest in them to invest in the right things. So they don't really have, like, when you invest in something and you mess up, it's like, yeah, it's my fault. I invested. That's me. But when you give your money to someone, you kind of say, like, shit, man, like, I'm investing in you to invest for me because I don't know what the fuck I'm doing, but you do. So I'm going to invest in you. And that's kind of what a lot of these institutions are. So that's kind of a big part of what's going on with that. Now, in terms of cons, there's a diluted ownership, and there's also a lower book value per share, and there's a higher PB ratio, and there's a reduced short-term outlook. And when I say reduced short-term outlook, I'm just saying, and don't get all in a knot, I'm just saying that there is a possibility. It's not the way that I view it. It's just the way that the stock world is going to view it, and they're going to view it like, oh, this company was exactly priced the way it should be, and now they did an offering diluting the shares, and now I got to sell. That's just very archaic thinking, but it's thinking that exists, and it's thinking that you can manipulate and take advantage of if you know that it exists and you know that it's going to happen. The issue is most of the time it's already done and by the time you know. But the stock price has gone down a little bit today. It went down a lot pre-market, and I think it's started to climb itself back up. We'll see how it does at the rest of the day. I mean, it's only 12 o'clock right now. But yeah, those would be the pros and the cons, and a few things I want you to remember going into this, going into the rest of this week, and kind of, just seeing whether or not you want to hold, average down or just sell. You're buying a company, you're not buying a stock. Okay, so remember, whatever the stock does, that's not what the company's doing. And when the company does something, you have to ask, is this impacting the stock or is this impacting the company? You have to remember, those are two separate things. Okay, a stock is just an imperfect representation of the value of a company. And we have to remember that that's not the case. So if we have a company and we know that they just issued shares, what does that mean for us? What does that mean for the company, right? That just means a better balance sheet. That's all that means. It's nonsense. It's good. The company is aware of the risk it's making with the stock. I mean, obviously there is risk. Don't get me wrong. It's not all completely risk-free. I mean, they do lose leverage when they have a lower stock price if it does decide to tank. But I think they're making a very good business decision to generate wealth. And with the added capital, the company can look towards fundamental expansion and growing their assets, which I think is extremely, extremely beneficial because they have already proved in 2020 that they've been investing in their own Senhan surgical system, and they can now kind of start looking at maybe taking on more liabilities or whatever the case may be to kind of have a better growth outlook that they can feel more confident about. And on top of that, we also I always like to say is buy the dip. Buying the dip is a very, very important function of value investing, and it's because you're gonna have a moment when you're like, oh wow, the stock just crashed. I have a moment here. Let me buy. That's a great moment. It's a great moment to have. Buy that dip. I bought the dip today. I definitely did because I knew that it's a great time to buy. So definitely look logically and say to yourself, do I like the company? Do I think the company's great? Great. How much money is the company making? Great. How much is the industry making? Okay. What's its competitors? How much are they making? What happens if they make as much money as their competitors make? How long would it take for they to start thinking about that type of stuff? And then once you do and you come up with price targets, and if you, like I said, you can just look at my videos. I have some price target ideas, and I have in-depth analysis on this company. And essentially, when you're buying the dip, you have to really ask yourself, is this a dip I want to buy into? And right now, this one definitely feels like something that it's not like, oh, the robot failed. It's the worst robot in the world, and nobody likes this robot, and it's never going to get a sale ever again. Versus that news, hey, we offer some stock to make some money. Okay, all right, cool. How did that Did that make the robot? Does that make the robot start malfunctioning? No. Okay, then why does it matter? What does it matter? Because that's this company. It's not the stock. Stop worrying about the stock. Worry about the company. You'll do better, way better, 100% better. But yeah, that's about it. Very short video, nothing too long, nothing too crazy. I appreciate you for stopping by, and like I said, definitely hop in that Discord if you want to have conversations with me. And then on top of that, we can also, on top of that, I also do want to thank the new subscribers and all the support I've been getting on the channel. It's been extremely helpful, and I really can't thank you enough. So have a great rest of your day, guys, and I will see you next time. Bye-bye.